Hey, what's going on, everybody? Welcome back to Big Gauchos, talking investing shows complete. I pocked up with money in your pocket. I'm Austin back again with Tyler. We got a banger episode for you. Let's go.
Yes, sir. What's going on, Big Gauchos? Your boy, Big Gaucho Tyler. We back with another banger video. Before we get started, please like and subscribe. I'll wait. Alrighty, thank you guys for that. And let's get into this banger of a video, Asti.
Thank you. We do appreciate all the love and support and for subscribing, and want to get into this first story that you see in the thumbnail. This is a little bit of a complicated one. So, big news coming out today. Adidas is selling Reebok to Authentic Brands Group, trading under the ticker ABG. Ooh. This is interesting because of the sales price mainly. They're selling it for 2.1 billion euros, which converts to about 2.5 billion US dollars. Adidas actually bought Reebok for 3.8 billion in 2006. So they're actually taking a 1.3 billion dollar L on Reebok. So the reason is Adidas overpaid because they were trying to compete with Nike, and then Reebok just kind of fell off a cliff. And long story short, all the investors and execs at Adidas were like, yeah, you guys got to sell this brand right now because it's a dumpster fire. I think everyone knows that. But ABG also owns Aeropostale, Forever 21, and Sports Illustrated magazine. So quite an interesting selection to add with Reebok. They're very excited about the acquisition because ABG just went public last year. So they're trying to grow and expand as fast as they can, and they think it's going to be a very viable addition to the brand, especially with all their celebrity endorsements. What do we think?
Okay, guys. So Reebok, I haven't really seen like ever. Last time I saw Reebok shoes was probably at a Sports Authority right before they filed for bankruptcy and closed forever. I mean, you might be able to get a couple at like Famous Footwear or something like that, but overall, Reebok just doesn't have that presence anymore. Everyone knows about the brand, but their shoes are nowhere to be seen. I don't think I've ever seen really anybody wearing Reeboks. If celebrities do come on board, start really repping the brand and start like coming out with collaboration shoes, trying to make it hype again, maybe they could have sales. But I mean, look at what Adidas did. They bought it for 3.8 billion and they're selling it for 2.5. So I mean, the
Yep.
numbers speak for itself. So if you're losing 1.3 billion dollars, then this doesn't look too good for them. So we'll see how they try to turn things around, but not looking good in my book. Not a buy.
Yep, Reebok's trash. Adidas is just trying to cut their losses. Tyler's right. You really can't find those shoes anywhere unless you have a time machine to go back to 1998 and steal some out of a gym locker or something like that. I mean, I really don't know where else you're going to find them. It's
Yeah.
just not really present anymore. They really slacked on the innovation because obviously everyone knows Adidas and they have Yeezy and all their, collabs with athletes and colleges too. And Reebok's just kind of on the sideline. It's a third or fourth choice for everybody. So ABG probably not going to be a buy, but it is a really interesting story. Maybe check it out if you can get some value out of it.
Oh yeah, definitely.
Yes, sir. But you also might be able to get some value out of Airbnb because they are going way, way, way up. Tyler, tell us about it. Let's
Oh,
go.
all right, guys. So, we've talked about Airbnb a lot, because of the pandemic, no one's really traveling. So they really took a big hit. But they just announced that their revenue has quadrupled in the second quarter this year. So get a little bit of backstory. Pre-pandemic, Airbnb generated 1.65 billion in revenue. They're projected to report 1.96 billion just in quarter three this year. The last 3 months this year, Airbnb generated $1.3 billion in revenue compared to their 300 million dollars last year. So they definitely took a step up because obviously a lot of the restrictions have been let down. A lot of people have been just itching to move, go out vacation, just explore the outside world. And obviously they're still at a loss. They were able to have a net loss of $68 million this year compared to their estimated losses of 576 million. So they definitely beat their expectations. They're still not profitable. I mean, in my head, negative 600, you're down 68 million compared to 576 million. Looks like a pretty good thing, but you're still in the negative. So I don't know how I feel about that.
Hey, but in Silicon Valley for a tech startup, 68 million in losses is a really good day at the office. So, I mean, I guess it's chump change to Sequoia Capital and all those angel and venture funding groups. But it is some pretty staggering numbers to see. I personally don't think Airbnb is a buy because they've been struggling, with their finances for quite some time now. It doesn't really seem like a secure place to park your money, just off my opinion. I think they have a lot of growing to do, and the stock might be due for a correction. It's been categorized as overweight pretty much since it IPO'd, so it's all the buy ratings are saying that. So it's a little bit of a downer.
Yeah, I agree. And also, Airbnb has been increasing their prices overall just to rent a house or, get a place to stay. You have that initial, $99 a night, but then once you book it or, get to that checkout, it hits you with like cleaning fees, processing fees, handling fees, whatever type of fee you can think of, they'll hit you with it. And then you're doubling your price. So, like, for example, a couple months back, we had an Airbnb with the Big Gauchos and all the Lady Gauchos. And it was supposed to be, I think, $150 for the night, and then all of a sudden it hit $400 on top of all the fees. So we're in our heads, we're like,
for
for 2
days.
days. So in our head, we're just like, wow, this is ridiculous. We'll never do this again. It would have been more cost effective just to get a hotel at that point.
Yep. They say Airbnb is trying to dismantle hotels, but I mean, with prices like that, I mean, they're charging you an extra 25% just to breathe. Let's be honest. So
Seriously.
even the cleaning fees, and like they charge like part of their property taxes to you, like they did when we stayed there. It was like, oh, like the prorated amount for property and city taxes. Like, it's just a bunch of ridiculous garbage. So Airbnb has really gotten out of control. I feel like they are trying to make up losses since they're not profitable, but I guess time will tell if they can even survive. But personally, not really a buy for me either.
Yeah, not a buy.
Not a buy, not a buy. But what could be a buy? It could be these big winners, big losers, and the sleepers we're gonna get to right now for you.
Let's hit it.
All right, all right. Subpar transition. That's my fault. First big winner of the day, we got Phillips Edison Company Incorporated. This is really crazy. They're up 140.94% today. If you go look at their chart, it's really crazy. They just IPO'd in February, and they've had wild ups and downs, just basically swinging from about $25 back down to $7 or $8. But basically, they're a real estate investment company that focuses on grocery stores and small strip malls. But they just got a buy rating from Morgan Stanley after they posted $126 million profit for Q3 of this year. Yeah. So I guess they're going to swing back up pretty high there. Morgan Stanley has them targeted for $33. So that's kind of exciting if for some reason you have bought this stock out of nowhere.
Wow, big moves for them. Congrats, Phillips Edison. It's not every day you hear that you actually profit in a company. Quick shout out. Quick shout out though. Speaking of grocery stores, shout out Albertsons. Their stock was just at around like $27, $28 these past couple days. So shout out to you. I should have held on to you. That's on me though.
I should have held too. I was just talking about that with Ben. Shout out Ben if you're listening. But yeah, it was crazy. I regret selling a little last year, but at the same time, I don't.
It happens.
Best at the time. Number 2, we got Opendoor Technologies trading under the ticker Open, up an even 24% today. They're a real estate iBuyer, which basically means they will buy your house and spruce it up and sell it. Multi-billion-dollar trust fund tech startup, Silicon Valley to the West Coast and beyond. So they're expanding rapidly.
Nice.
Yep. Not too bad. Not too bad. But what is really bad is the biggest losers of the day.
Dun, dun, dun.
Sheesh. All right. Number 1 biggest loser, we got Vroom Incorporated, down 19.97%. Used car tech startup. Basically, they're just trying to copy Carvana, but they're trash. Everyone knows that. I don't know anyone that buys cars from Vroom, so that's all you need to know.
Yeah.
And and number 2, we got Fisker Incorporated. Electric cars, not scissors. Don't get that confused. Don't get it twisted. Down 17.17%. Basically, repeating numbers are not that great in terms of, I don't know what I'm saying. Lucky numbers.
Just revenue production,
Just
just
revenue,
not having it.
revenue,
Yeah.
production. If it repeats, it's not good. I don't know what I'm saying. Basically,
Yeah.
Fisker sucks because we're all in on Lordstown at Big
Yes,
Gauchos Incorporated.
sir. Let's
So
go.
stay as far away from Fisker as you can, please. Buy Lordstown, take a ride.
Yeah, go for riots at $5 right now. We're about to start production. They're gonna go crazy. This is it. This is the bottom. We're peaked out right now. I'm telling you, go in on this. We're not financial advisors, but that's what we're gonna do. So if you want to watch the show, just let us know.
It's true, not financial advice, but best advice we can give is take a quick nap, check out the sleepers. Sleep, 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 sleep,
Sleep, sleep,
sleep,
sleep,
sleep.
sleep, sleep.
Oh, woo. All right, number one, we got Marketwise Incorporated, MKTW, which is a stock market investing news and data company. So could be very good for institutional investors and day traders alike. Very good for stocks and trading.
Oh yeah, get that in news ASAP Rocky.
Yes, sir.
And number two, we
Go ahead.
got Clear Secure Inc. under the ticker YOU. They're an Airport USA facial recognition check-in technology company. So, look out for them, scanning their face and selling it on the black market because that's what they will probably do.
Mhm. Yeah, just like Apple with all of Siri's info, conspiracy, no conspiracy, whatever. Believe what you want. And number three, we got Ollie's Bargain Outlet, which is under the ticker OLLI. It's the greatest bargain outlet ever in the country that we've never been to. Check out the Midwest if you're looking for some good deals. Basically, it's just a huge Walmart-sized Ross, if you will.
Dude, I love that. I love their slogan. Good stuff, cheap. And with the old man, I want to go there. You have to go there.
Hey, ain't nothing to it. It's a great company.
Just
Just like
simple and straight to the
Anchor.
point. Ooh,
Yep.
Anchor.
Oh, very simple and straight to the point, just like Anchor. Sheesh. All right, let's hit that ad. Can't say enough good things about Anchor, honestly.
Seriously. Top notch.
All right, you already know the deal with bankruptcy bunny. No new additions. We hate Ruby Tuesday. Next.
Next. Who won tonight?
Nobody won today, actually, because nobody picked a number in time.
I did pick a number. I'm just saying.
Tyler picked a number at 8 o'clock in the morning after the market had already been open for an hour and a half, which is okay. I thought he was going to slide with it at first, but no new additions. We got a scene from Rounders up there. And Canal is leading the pack. 4. Tyler's got 3 in second place. I'm very far behind. I'm at 1, and Dave's even further behind at 0.
What are you doing, Nasty, for today?
Oh, I'm gonna go with. Oh, I forgot what I said. 35,555.
Ooh, nice,
Yeah,
nice,
that's
nice.
what it was.
I'm picking 35,421.
All right. Very good spread. Doubt Dave's ever going to play again, but we do miss him a lot. And
Miss
we
you
wish
guys.
him the best in medical school. Canal, you're going down. Tyler's taking that dub in first place. I got to encourage him this time.
Let's go.
Major gains, major gains. And we want to thank everyone for listening. We hope you enjoyed the show. Leave us a voice message on anchor.fm/gauchos or biggauchos.com if you want to send us an investing tip on the show. Tyler, do that thing.
All right, big guys, just quick disclaimer because we love disclaimers. Everything said on this podcast is our opinions from our experiences. With that being said, please do due diligence and invest safely, Big Gauchos, because we are not liable for any lost gains, but we're directly liable for all, you already know, major gains. With that being said, thank you for all the support. Please like and subscribe. Please follow us on our Instagram at Big Gauchos and our TikTok and all our other social media platforms. And Osti, please let the viewers know all of our podcast links.
Of course, happy to do it. We are on all streaming services now. We're on Apple, Spotify, Anchor, YouTube, Google, Pocket Cast, Breaker, Radio Public, Overcast, or you can ask your own RSS feed to listen to podcasts anywhere you want. And with that being said, make sure, especially if you're listening on Apple Podcasts, just rating 1 to 5 stars. Do not accept anything less than 4.5 stars. And this review, tell us your favorite Big Gaucho is, and leave that link. Share a time code with a friend. We won't be offended if you don't listen to the whole thing. What else do we have to add?
Keep investing, keep watching the market. Dow Jones is at 35,000, so who knows, it could go through the moon. Crypto took a little bit of a dip, so buy the dip. Big Gaucho merch coming out soon.
Buy the dip on crypto. Buy Lordstown. Dow Jones 36K. We're out. Peace.